Good evening, good day rather, everyone, depending, I suppose, what time zone you're in. For the Aussies, it would be midnight, right? But anyway, we've got a uptrend that seems to be continuing here. I believe the S&P is just hitting new intraday highs, and we've got the Fed that continues to toe the line in terms of QE and using the language the market wanted to hear. And therefore expectations stand pat at rates staying low for a prolonged period of time. Many analysts think till at least mid-2015, but of course that depends on how the economy turns out. So far, all this money printing that's happened since 2009 doesn't seem to be really having a positive effect on anything except for stocks, which I guess the bull market started in 2009, so we're in the we're in a good sixth year of the bull market now, yeah, it's getting long in the tooth, but it doesn't matter because as long as the Fed keeps printing, history's always shown that printing money damages the currency, but it does tend to inflate the price of hard assets. And the Fed maintains, however, that the CPI is at very low levels. And that inflation is contained, therefore it gives them the license to print more money. In other words, they're basically buying themselves headroom by pushing these questionable statistics onto the public, like the CPI, which we all know is a bit fraudulent. It doesn't really measure true inflation because when you have certain components go up in value too much, it's been seen that those components get yanked out of the formula. So. Yeah, sure. You shoot down all the things that are going up in value. You can maintain a very tame CPI percentage, and that seems to be what's happening here. Because you ask anyone in the States or the UK or Europe, and they'll tell you that the cost of basic living expenses have gone up appreciably. Whether it's food quality, just the price of basic food, the price of electricity, the price of oil, gas, all that. The cost of living has certainly increased over the last few years. So to say that we don't really have inflation or that inflation is maintained is kind of a joke. We also have an issue about all these central banks printing money and therefore ultimately creating an inflationary situation that's above and beyond what we have right now. And that in turn would serve to further damage the existing currencies at the cost of people.
You there, Dr. K? You sort of dropped off. We lost Dr. K, everybody. Maybe the Scotland voted to secede and cut off the internet. Anyways, everybody can hear me okay. I guess I don't know. I'm going to give you guys a little bit different message. I think the market, the Fed, doesn't really know what they're doing, and the bottom line is that QE doesn't really produce any real growth, and it's the same old story. They come on every time, and Janet Yellen babbling yesterday at her interview I thought was just kind of comical. Interest rates will stay low for an extended period of time. She tries to massage the economy or the economic situation as being constructive, and I think that she's pushing it because it's really not that constructive, and I think it's just all part of this Orwellian world. The economy is doing well, but we still have to keep interest rates at 0%. And then yesterday we had Obama babbling about how by every measure the economy is doing better now than it was when he took office, which is entirely false. Median incomes are down. Poverty rate is up, more people on food stamps than ever in the history of the country. So, we live this Orwellian world, and I guess all these people consider that if they just keep saying the same thing, it'll eventually come true. So, anyways, tap your peels together and tell yourself there's no inflation, the economy's doing great, and everything's just fine. Meanwhile, I think that the money printing just tends to keep the market buoyant, and every time it tries to come in, it finds some support My tendency today is to look at this rally as possibly shortable. And that's what I'm looking at here. I understand that you have, the NASDAQ is trying to push to a new high coming up, so we'll see what happens. But my view is if I can short some names that look weak in here at logical spots, then I can keep my risks low because I'm not really seeing a lot of stuff I want to be buying in here. If any of you do, let me know. But it seems to me like a lot of things are coming in and they need either to settle down and set up again, or they're going to roll over further, and it becomes a matter of playing the market on a stock-by-stock basis. So, for example, you might be long. There you are, Dr. K. You're back.
That's really annoying. When Sky took over, they promised that basically there should be no flaws in the line. And over the last 3 months, I've actually had, this is the second time that's happened. So they've been true to their word. I mean, and each time it takes about a minute for them to restore. So in 3 months, I've lost about a total of 2 minutes of downtime, that's okay. I can live with that. And I think most people probably deal with more than, worse conditions than that. But that's really annoying that it had to happen right there at that spot.
Right. So I don't know what your thought was. I tried to carry on.
What was the last thing you heard?
I don't know. I don't know.
Well, I wasn't
listening that intently. I'm watching the market very closely here because I'm lurking on the short side, and I'm looking to hit the market on the short side into this rally. So I'm watching my quote screen and my alerts probably more closely than I was listening. Sorry. Anybody want to help Dr. K out? What was the last thing you heard? What I'm going to say. So. Anybody want to help Dr. K out?
I admittedly probably not always listening either, but it all depends.
It was something about QE and the Fed this and that and whatever. I sort of picked up.
Yeah, well, I was just saying that the Fed, all these central banks are printing money like there's no tomorrow, so they're damaging their currency in the long run. What's that?
There is no tomorrow. It's always right now.
Yeah, I mean, and so you've got hard assets that go up in value, and I was talking. You heard the thing about my whole take on the CPI.
Right, it's all BS. You know that.
This morning's report. But basically, you have a falsified CPI. You don't have true inflation out there. Real inflation numbers are much higher than reported. So, what's at risk really is the sanctity of fiat currencies, people's savings, and in the meantime, people do benefit from hard assets, and in the stock market, it's been the most challenging trend-following kind of market. But that said, you can either play it on the shorter term or the longer term, and there's really no in between because by the time you're sitting in profits in your stocks, the market's going to correct 1%, and then your profits dry up in a heartbeat. So you really got to sell at the strength, or you got to play the short side and play the short side if that's also your bailiwick. But also be very quick to take profits. I mean, back in the 90s and this last 10 years, the way to play shorts has always been to never get too piggish, never get greedy, and take your profits when you have them because they tend to come pretty fast when you hit the short side just right. Long side rules were just reversed of that. That is, when you have a quick profit, you sit and hold your position. And that's worked brilliantly in good market years. But the last good market year we really had was the late 2006, and then we had 2003. And apart from that, it's been very, very tricky. So it's almost been better to buy your pocket pivots early in the base and then sell into the strength these last 2 years. If you're on a stock like Tesla, then you can relax the rules a bit and maybe keep a core position that you just hang on to and use the 7-week rule as your selling guide.
I'd sell Tesla here myself. I guess you could use a 50-day moving average as your selling guide, but I would sell it here. I think the bounce is sellable. I think it's shortable too. That's my view. I mean, if you look at this, look at the break, huge volume break, takes you down to the 50-day.
When I mentioned Tesla,
and bounce, that's normal.
I was speaking in terms of prior big gains that the stock had when we when we told members about it in early 2013. Then that's a kind of stock you could use the 7-week rule on and be able to hold it out. I mean, currently I'm not. I had a position in this a couple weeks ago, sold it out. I wasn't sitting in it at all 4 days ago when it had its break, but when it does something like that, you have a mini gap to the downside on heavy volume. If I had any shares, I would have pitched them probably at the open. And if you're sitting in any Tesla right now, I'd probably be selling into this little bounce.
Yeah, I'm actually looking to short into this. So I mean, it's right up near the 200-day. I have some tiny positions, like 500 shares each of the Netflix and LinkedIn short overnight, and some Tesla too. But I had shorted them yesterday, and they came in, and I made some money there. But here you see you have a sharp break off the peak, and I was actually long. I was actually 130% long coming in over the weekend. I thought we would get a bounce in the market, and we did. And so we gapped down on the opening. I just lost everything right at the opening, and that was a smart thing to do because it could have been down pretty good on the day. In fact, I went short and was actually up on the day. So I'm actually very near my highs for the year in terms of performance, and trying to hang in there. But it's real tough, Dr. K. I mean, right now I don't see anything I want to buy. I'm seeing some things potentially shortable. I think the Amazon, is you're in this little bear flag. You filled the gap here. We were in the chat room the other day, and I think everybody saw it. We filled the gap. That's where you cover short term, and then you can short it back again on this rally up towards the 330 level. You're getting the same sort of thing today. The volume's kind of light, I think. But my guess is it may rally back up to 330, I don't know, and then roll over. But my guess is this is probably headed lower. You're in a big sort of head and shoulders complex, and you've got this right shoulder complex now. Here's the left shoulder, the head, the right shoulder, another right shoulder, another right shoulder. But the other thing to notice here, and this is the fractal nature of short selling patterns, is that on the right side, as you're building this right shoulder complex, you're actually building a little left shoulder, a head, and another right shoulder here, and you're starting to break down. So it's clear to me that 331.45, where the 10-week is, or let's see, where is it? The 50-day 334.06. That, to me, that seems like the limit on upside resistance for, or that would be the collar, and where resistance is for any upside move in Amazon from here. But you're basically in this bear flag. You see that sort of triangulating, and you're picking up selling volume. I think it's a matter of what the general market does. If the general market gets into trouble, then this thing's breaking for this low, probably, which is what is that, Dr. 304.58, I guess. So that's what I'm watching here. If for those of you who follow me on Twitter, on Monday there's quick short opportunities, I thought, on LinkedIn, breaking down through the 20. I was suspicious of this thing once it had broken the 10-day. You get a violation of the 10-day, breaking through the 20-day. That's actually a situation where you can go short the stock intraday as it's showing weakness rather than trying to short a rally, because a lot of times if this is a big ugly pod sort of thing, which is what it's looking like to me, the way they'll break down is they'll fail at the 20-day first, and so that's usually the first, say, line in the sand that I look at when trying to assess whether something is a pod that's going to fail. I mean, you never know. I mean, these things could turn around and just go higher, but you're looking at this. This doesn't look right to me. Big break, rapid ascent back up. I don't think it's sustainable, and so you're looking for a short spot in here, and it starts to weaken in here. This is really where you're coming after. Now you've bounced. Notice he bounced off the 10-week line, but you never got to the 50-day. So you got to be watching both the weekly and the daily charts on these. So that was shortable, but then coverable. Once you saw it bounce off the 10-week line. Same thing with Netflix. Breaks them, but what I notice here, you're in a short bear flag. It's sort of wedging, and it looks like it wants to roll over and go lower. Doesn't look all that happy to me. And again, this could be not necessarily a punch bowl of death, because it's not that deep. Actually, how deep is this thing, Dr. K? Can you give me a percentage there? Let's see. 34.6%. That's not pod. 45+% probably is pod-like. But in any case, what this probably is a late-stage pattern, because you've been going for a while. And so if it fails, it would be a late-stage base failure. So that one, I thought, I'm watching Taser here. I'm actually short. I shorted it above 17 this morning when they were bouncing it. And it's coming in down towards the 20-day. I covered some of it, but I'm still holding a small core position in this. It looks pretty weak. Coming in, probably heading for the 200-day at 1566 here and 1560 there. But to see, this is a situation where this could be a pod as well. Straight down, straight back up. big news, a bunch of hype drives the stock back up to the highs, and it fails. So this could also be a pod, low price pod, I guess, in terms of this, because this is very much a what is that, Dr. K? 50%? Can you hear me, or did Sky lose you? Oh, okay, yeah. So that's 49.8% actually, to be precise. So that's what that could be as well. And you see, you're breaking the 10-day here, so violating the 10-day now. You probably could have used it on the way up. Right about here, maybe you're at 7 weeks, I don't know. But, we'll see what happens here. But I think this might be in some trouble. So, if you bought the stock lower and you made 10, 15, 20%, if you're not taking it, I think you're just stupid. So, somebody said that the last thing they heard on your end, Dr. K, was the sound of scotch pouring. You don't drink scotch. Dr. K's a martini fan, I think, like me.
If I had my Scottish friend visiting, I could blame him that he might have been pouring himself a stiff one.
Anyways, okay. Do we have any more questions here? I'm giving you guys my lowdown. Oh, one stock I think also on the short side that I actually liked on the long side after this pocket pivot here, and it hung in tight. You buy it along the line. You get a one-day wonder trade, and that was a very nice trade for those of you who took it. For those of you who sit there thinking that maybe it's starting a long-term move and you're going to position build, you got whacked pretty good. And if you didn't sell on the break, if you bought it in here and you didn't sell once you're going negative or flattening out on the position, you're slow. You're just too slow. And I think you can't let stocks give you a nice gain and then completely disappear like you're going to sit there and play for a long-term gain. And I know some people will say, well, I can't sit and watch the screen and trade every day like you do. And that's one of the reasons I think this isn't really a market for people trying to play a long-term trend in stocks unless they're taking smaller positions and giving them a lot more room and being willing and are willing to sit through a lot of volatility. So PCRX, somebody says I went silent. Does everybody hear me okay? You're back. I think that's your cheap internet there. PCRX, I don't know. I'm not a buyer. It's just kind of hanging along the 10-day. There's a pocket pivot there, but it fails. And now it's trying to wedge back up. So I'm not a buyer of anything. So if you're going to ask me about buying stocks, you're asking the wrong guy. Maybe Dr. K's got something on that. You see anything you want to buy here, Dr. K?
No, not at the moment.
No, I mean,
that could change. I mean, we've had a number of pocket pivots, and a few of them have worked. So if you're quick on the trigger to keep the stops tight, and then sit on the like GBX, that's still up. There's no reason to sell it yet. But again, I would be looking very, very closely about GBX, about taking profits if you did buy it on
the pocket pivot here
on the 16th.
So yeah, I mean, there you got a nice move there. Not quite 10%, maybe 7, 8. But I see a lot of this going on, and if you take it, I've been able to drive up upper mid double digits for the year. I'm hoping I can.
The only
but we'll see. But
thing that I've been,
that's the way you have to play this market. Go ahead, Dr. K.
The only thing I've been sitting long on is the volatility, but that's around a core position. In this market, you got to play stocks like the way we've suggested, which can be, again, you can play them longer term, but you got to. If you're going to do that, then you probably should be in cash most of the time, because it's very rare you're going to see a really true leading quality stock like a Tesla. And Tesla's not in play now, but I'm talking about back in 2013. It was very much in play. That was an incredible story. It had all the qualities you want in a true leading stock. And then you could be sitting on that one. I don't see anything on the horizon right now that equates to a Tesla, but obviously these things can change. I think Alibaba is going to be going public soon. The fundamentals on that stock are about as perfect. If they're to be, I'm assuming they're to be believed, and if we can believe the fundamental numbers, they're about as picture perfect as I've seen since Microsoft's IPO back in the 80s.
Who's, Dr. K?
Sorry?
Whose fundamentals are those?
Oh, the fundamentals are on
what? On Alibaba or Tesla?
No, Alibaba.
Okay. Yeah, if you can.
I think it's going public soon,
but
just in like a couple of weeks.
I mean, you're not going to buy the IPO, everybody. We're not looking to buy their IPO on Friday. For anybody asking.
Yeah, wait for the pattern to set up. But the fundamentals are yeah, like I said, they're incredible. So I would like to see the pattern set up and offer a pocket pivot of some sort. Or if there's other techniques we'll be talking about in subsequent books. But there's when the stock gets very, very quiet on low volume, you can actually buy it on the first sign of strength, and it's a different type of buying technique which seems to work in various markets, not just this one.
Hmm.
So we're going to be watching for those types of possibilities. If we see that other technique, we will obviously inform members that it is in play.
Let's see. Somebody asked, they want to know what's on your watch list. What are your hot stocks that are on your watch list?
Well, those pocket pivots that we report on, every pocket pivot we sent to members is by default going to be on my watch list
Right.
because they're good enough to report. And that list is dynamic; it changes. So as any of these stocks don't measure up, like SKX, if you bought the pocket on that one, certainly there was plenty of time or plenty of signs to sell that thing shortly after the open, because it wasn't working out at all.
Yeah, there
Just
were.
where stops come in very handy, and or mental stops. If you don't have time to follow it, then just having the stop in place is a good idea. Yeah, I remember the great Ed Sekoda always advised that. He said, if you're out, if you can't watch your stocks for 2 hours, make sure all your stops are in, because you never know what's going to happen.
I like this one individual asked, we'd like to know what's on Dr. K's watch list. It's interesting that he can speak for the group. Does everybody want to know what's on Dr. K's watch list? It's a magic watch list just like mine, and everything that we have on there is definitely going to go higher. So I don't know. Who cares what I have on my watch list? If you can't find stocks, if you don't have enough expertise at this point to pick stocks that are potential buy candidates in the event of a proper long setup or pocket pivot, whatever, I don't know, maybe you need to go back to the basic remedial course here. But, what's on a watch list doesn't mean anything. A lot of times we miss stocks. I mean, give me a break. I missed this one completely. And I screen for IPOs all the time. And I guess this one, for some reason, there was some criteria that didn't make it through my screen, and I never saw this. I mean, it's a classic IPO U-turn. Boom, you get a big move. But I think, if you're not quick here and you got in somewhere in here, you might see all your profits disappear pretty quickly. So, be careful. And when you have, this kind of a move, I don't understand why people would not sell into that. Instead, what they want to do is, like, look at G-Pro, for example. People want to buy at the 10-day, and, they didn't buy in here anywhere, but now they see this, and they see a little pullback, they want to buy at the 10-day. To me, if I own this thing, this is probably the spot I'd be taking my profits and bagging it and letting it build a new base, because there will be a new buy point in the pattern at some point. You just sort of have to be attuned to it and waiting for it. I would rather sell into this, take a huge profit. I mean, what do you have here, 40%? I don't know, Dr. K, maybe you can calculate it, something like that. 40% of this thing.
You got more than, it's like 55% there.
Yeah. And yes, like the guy, don't be like the idiot who bought Plug back in February, at $3 or something, right in here, or $2 or $3, and he never sold into that, and he's still sitting with the stock, and it's getting ever closer back to the buy point at 448 now. So, I don't really understand what people start to think. I think the greed kind of kicks in, and their brain starts to malfunction. And they somehow believe that this means, it's going even higher, and buying at 3 and watching it go to 11. What's that? A gain of what? 300%, 400%?
Yeah, 300%.
Something like that.
Yeah, massive greed mentality.
Yeah, it's like, what the hell are you thinking? And I would stress that in this market, you definitely don't want to be allowing yourself to be ruled by greed. You see something moving, you got to buy it. I don't really understand that impulse, but it's definitely an individual investor thing. I realize it's personal preference.
In the 90s, actually, the greed just would take people's heads straight off. because you had a lot of good uptrends and people would start to pile on very late. The market was much more forgiving back then, so you could buy stock late. But that kind of mentality, usually people held on too long and then would end up closing the trade out at a loss.
Right.
And we had a lot of streakers, shooting stars, shall we say, in the mid to late 90s.
Right, and a lot of guys,
extraordinarily well in temporary time.
and a lot of hedge fund guys that we knew, Dr. K, at the time, you recall a few of them, when the market first broke in March, it starts coming in, and they start seeing all these stocks, that were at 300, now are at 200. They want to buy them, and they all step in and start buying them. The stocks go to 100, and they're all out of business. So a lot of hedge fund guys get blown out after March of 2000 because they insist that these stocks are going higher. Do you remember going to New York and we met with a hedge fund client who owned InfoSpace? And InfoSpace had been like $300, and the stock was at 56 or something. And they had some $1 million internet analysts, and I think I write about this in the first book. We wrote about this, and the guy's going on and on about how InfoSpace is so great, and this thing went from it's now from 200 down to 50 or something like that, and they're decimated on the position, but the guy's still going to sit there and tell you how they're buying more here. It eventually went down into the single digits. So the market giveth and the market taketh away, and your objective is to make money. Your objective isn't to marry stocks. Your objective isn't to treat everything like a long-term play. Your objective is to know where to buy them and then to know where to sell them. Know when to hold them, when to fold them. Use that old saw if you want. Somebody asked, I realize it's personal preference, so why are you asking? But what do you guys consider keeping your stops tight in current conditions? And if using a trailing stop, what amount do you like to use? To me, this is another question that centers around this sort of deterministic or mechanistic determinism, as I like to call it. If a stock looks at me funny, I sell it. How's that for a trailing stop? If it has a big run, I sell into the big move, so I'm not worried about a trailing stop. I can't emphasize any of that or place any more emphasis on this than I already have in so many prior webinars and everything else that I talk about in the chat room and Twitter, whatever. Because I don't have a problem if I sell something and it turns around and goes back up, I have no problem buying it back. And I know a lot of you have the mental block of being price dependent in your thinking. It's like where you bought it and sold it matters. It doesn't really matter at all. It's where you buy it and where it goes from there, not where you might have bought and sold it before. So I bought and sold Apple 4 or 5 or 6 times back in early October, late September 2004 before I jumped on it and had a big gain. And I ended up buying it 5 or 6 points higher than I was selling it. But it took off from that point. I think it gapped up to 43 back then. Well, it was 43 before the split back then. Now it would be what? Somewhere around 200. No, what would that be? Well, 7 divided by 7, somewhere around $7, I guess. I don't know. Anyways, there is no magic number. So, another way to keep things tight is if a stock you have just breaks the 10-day line, just blow it out. If it has a big gain, if it's a big runner. Do you have any magic trailing stops, Dr. K?
Yeah, well, I can understand and relate to someone who wants something more deterministic, and that's what rules are for. That's where the 10-day rule can come in. So at least you're not sitting on a stock, months after you should have sold it. If you have there's nothing wrong with deterministic rules if you're newer at this and you haven't developed a chart eye so that you can see things in context. But your goal, every trader's goal should be to develop that chart eye so that they can be less and less deterministic and more contextual to conditions. That's really, I think, an ultimate goal for every trader. And that does take a number of years to develop. And then you will continue to develop it even after you think you've reached the top. You never actually do reach the top. O'Neill is always fond of saying that he's still a student of the markets, even after all these decades of success that he's had. So I like that. I do consider myself a perma student.
When you go long, someone asks, do you take into consideration any valuations as price approaches targets by analysts, or are you paying more attention to technical? So you're asking us, do we pay attention to valuations on stocks that analysts put out? Why would you pay attention to an analyst? I don't really understand. In my view, if you pay attention to analysts and their valuations and all that, then you're you really don't know what you're doing, and you're pretty much a sap for what the analysts are telling you, which they don't have a clue either. Having known very many of them, or quite a few of them, and having had one who worked for me telling me that Apple in 2004, October 2004, was fully valued at $38. Stock went above 90 by the end of the year, but you don't listen to these guys. And PE valuation means nothing. Forget about it. If you think PE is something, that guess what? They've sucked you into the herd mentality about PEs. PEs are nothing more or less than an indication of what value the market places on a given company's forward earnings stream. So if something's selling at 50 times earnings or 50 times estimates, the market's telling you that it places a high value on that company's earnings stream. And that's a strong sign. So that's why a lot of these winning stocks have big PEs. But why would you pay attention to PE or valuation?
Yeah.
I mean,
Most analysts can't beat the markets, and this has been true in the 70s, 80s, 90s, and currently. It never seems to change. I think the problem most analysts have is that they're wedded to the fundamentals a little bit too much. They get married to the stock, and meanwhile they're using very old school or outdated rules when applying technical analysis to the stock, so therefore they get swayed by stocks that are to them too inflated in value based on their PE, or other metrics that they use all kinds of metrics to determine if a stock is overvalued or undervalued. And a lot of these top Goldman Sachs and all these investment banks, they will base their recommendations often on whether they think a stock is overvalued or undervalued. And we saw plenty of flops in, well, you just go back over the decades and you'll see that these analysts really get it wrong when it comes to some prime winning stocks. It's just simply because the best stocks out there will get way overvalued. Overvalued tends to become even more overvalued, and analysts will start putting hold or sell recommendations on the stock on the basis of valuation. And in the late 90s, there were so many. I did a study once just to see if how many analysts got it wrong, and it was virtually all of them got it wrong. Going into the big stock market runs in 98, 99, and 2000. Where they would just start to call run for the hills on their reports on the basis of extreme value overvaluation. But of course, that's where all the big money was made.
anyway, somebody says you are muted. No, I don't. I think you have cheap internet. So my suggestion is get some real internet service. Let's see. So what are we talking about? More questions here. Gents, what trading platforms would you suggest? I highly recommend trading platforms that allow you to enter buy and sell orders as well as short selling orders. So that's a good trading platform generally. If they don't do that, then I can't recommend them. You have any words of wisdom on trading platform? Why does everybody think a trading platform matters? If you buy and sell stocks right, you could use a stupid website platform. Everybody thinks there's some magic platform that you should be using. So if you find something that tickles your fancy, go for it. But I don't think it really matters. And if you're fixating on that, I think you fixate on the wrong things. So let's see. More questions. TradeStation is the best, someone says. If you use it, you will never have a losing trade. There you go. I'm in. Sign me up for TradeStation. Let's see. Market's just kind of flopping around. You got triple witching tomorrow, options expiration tomorrow. So some of this craziness might be related to it. Looking at the NASDAQ, you're trying to push for the highs here. S&P doing the same thing. It's actually at an all-time high right now, which the way this market trades would be a great place for it to flop in. But I can't say that I've had any major alerts going off while we've been doing this webinar. So I sit in a chair, don't need a platform. That works too. Very good. Let's see what witty answers are there. But Dr. Ken and I were talking about this earlier. It's amazing some of the questions that you get. And I guess, we were saying this on the chat room. I guess everybody starts out as a moron. You think that things that are not relevant aren't, and what platform you use. What is the magic stop number that you use on a trailing stop or a normal stop or whatever, and if you sell into strength, what percentage move do you sell into? Things aren't all that calculated, and some of the best investing is probably done in the most simplest fashion. So, I mean, I notice when things work well for me, it's pretty easy. I'm not really having to think much. So, anyways, have you looked at steel producers sector? I have, actually, and there's a number of them been acting well. X had a viable gap up. We didn't put anything out on that because I guess, I don't know, you look at that and you go, oh yeah, that's going to work, and it does. Okay, so the market loves to fake you out, and it does its best at all times to do so. And so, yeah, some of these are extended though, but I'm not going to buy this. I'm not going to buy, let's see, STLD, Steel Dynamics, another one I've been looking at. That same thing, a big viable gap up, all of these are moving. You think that means anything, Dr. K, or is it just they're loading in the steel stocks now?
No, it's a hard asset, so I think maybe some fund managers, it's a very liquid name for some funds, and the steel group, the group rank on this thing is 6 right now, so it's one of the leading groups. But
Yeah,
I'm not interested. I mean,
not
these kinds of names, they're flash in the pan. You'll get like a move to the upside, like we've seen like once in a blue moon, and then for this uptrend to continue would be well, all you have to do is look at the chart to see how much longer you think this thing's going to really continue. This thing really doesn't have. In fact, I think this is the first time it's had one of these kinds of moves.
Yeah, Dr. K, can you talk about this one? I got to run downstairs real quick here. I'll be back in 20 seconds. Just someone's asking, is CSIQ extended? You want to cover that?
Yeah, sure. So we know that the solar stocks have they've been doing better. It seems like a number of these names are near or on getting closer to completing their basing patterns. CSIQ is one of them, and yesterday we had the pocket pivot. It looks like some of the other the earnings, of course, on the stock are skyrocketing. If you look at some of the other names in the group, like leading name FSLR, once upon a time leader, it looks like it wants to complete its base as well. The earnings aren't looking as good on this one. And then if we look at Solar City, also looks like it's wanting to complete its basing pattern sooner than later. So when everything's you put everything together, yesterday's pocket pivot looked actionable.
Okay, I'm back. Market coming in a little bit here. I don't know. I think they're going to blow it up. We'll see if I'm right.
Yeah, I mentioned FSLR and SCTY as two names in the solar group that are looking to complete their patterns. And so the group as a whole,
Well,
enough of these names complete their pattern and start going. I mean, obviously group strength is gonna jump.
yeah, but my view is Solar City is a late stage fail base. Here's the move all the way from the IPO. You come out of a flag pattern, another base here, another base here, another base here. Now you're forming this big, ugly cup with handle, and you kind of stall here on heavy volume, and you didn't follow through on this move, so you've now failed at the 50-day moving average, and so this is now morphing into a late-stage failed base. So I think this thing's got problems.
Right,
I
some of the other
think it's a short.
some of the other names.
Spewer,
Yeah, it could be.
there, but Spewer's not really hanging in there. It's trying to. First Solar, kind of flopping around, wide and loose. It looks to me. I don't really see anything here that excites me. So, CSIQ is probably the best acting one right now. But who knows? Well,
it's the only one. It's the only one that's actionable right now. But
Right.
the others, we have to wait to see where their base goes. I mean, do they complete and go to the upside, or are they just going to languish? SCTY does have some compelling story behind it, and it has made quite a move. So it's perfectly entitled to potentially retesting some lows. But overall, the question is, can Elon Musk's vision be realized? And that might take longer than expected. So we're going to have to just wait and see what the stock price tells us.
Well, I think the stock price is already telling you that it's a short. You short this thing, use a 50-day moving average as your upside stop. It's a late-stage base failure. That pattern right there, where you've now broken down through the 50-day and the volume is very heavy, and now you're wedging back up into what's the 65-day exponential. That to me is a screaming short. And you use the 69.96 level as your stop. The closer to there, the better that you can get a short off. But that's how I look at it.
Well, and that's fine. But that is on a. I would say that's on a shorter time frame. I would say that if someone said the stock 3 years from now is going to be at 400, I wouldn't be surprised. So I'm just talking purely on that basis, not on a tradable basis, but just is the stock going to complete its base now?
Who's saying?
Or is it going to wait?
But I'm not saying on a short. I'm telling you this thing has failed. Right now it is a short sale setup. You short the stock, and the idea here is that it's going to break to the downside. You got a very deep cup handle formation. To me, this looks like a top. Whether it's going to go 400 years from now, you have no idea. Nobody has any idea. And for all you know, it could easily be down at 20 again, right?
Well, of course.
So.
But that's my point is not that. Everyone knows what you're saying. My point is just simply just discussion of when we talk about fundamentals. This has a compelling story, and it is interesting to see where it's going to end up. But it's not a tradable stock on the long side, certainly.
No.
Unless it sets up. Even if it does set up and go.
I just want to make sure you're not telling.
Great. That'll tell us all we need to know about the fundamentals if it does set up and go. I agree that it looks like it's not going to. Odds are over the term, it's not going to be setting up and going anywhere anytime soon.
No, and I can say definitively, right now, right here, right now, in real time, remaining entirely in the present, this sucker's a short. End of story.
Yeah, but no one's who's arguing that. I mean, you can say that 100 times, and no one's saying that's not true.
But it's definitive. Sitting there and trying to talk about a stock in grandiose terms about what Elon Musk's vision is all about, to me, that doesn't get you anywhere. That's my point.
Of course. Look, half the time we spend, we do theorize about stuff. When it comes to trading, that's where you got to, the rubber meets the road.
That's right. So, anyways,
but we don't just purely talk about.
So let me ask you this. Let me just ask you a simple question then.
I mean, many times we've entertained questions about where's Apple going to go? Is it going to go higher? What's the whole thing with their fundamentals? We talked about Apple's fundamentals till we're blue in the face.
Right. No, I understand what you're saying, but my point is that I'm saying right here, right now, this is a short. That's what I will say about this stock. And
that's valid.
Yeah, okay. I just want to make sure we're on the same page here,
Oh, yeah.
Anyways, I think everybody likes us to mix it up a little bit anyway, so keep everybody on their toes.
That keeps it spicy.
Yes, hot and spicy. Anyways, Gentherm, what about it? Therm short? I don't know. I don't really see that necessarily. It hasn't really broken any support levels. I think there's probably better stuff to go short if you want to go short. But I still think it's all kind of in flux right now. So I saw my little short positions out. And, there's not too much going on here as I see it. Taser coming in some more. LinkedIn kind of hanging out. Amazon up a couple of bucks. That's not even 1%. Netflix bouncing back up to the 20-day moving average, I believe, which probably, no, not even getting that far. This thing can't seem to get anything going off here, which I think is surprising. Anyways, what else? LVLT a couple of days ago. Does this count as a pocket pivot? I guess if it meets the parameters of a pocket pivot, it counts as a pocket pivot. So, not like I'm going to buy it.
Yeah, I mean, it technically is a pocket pivot, but you'll also see that it tends to violate its 50-day routinely.
Right.
I don't know. It's got some. It doesn't excite. It's not that interesting a pattern. If you look at the weekly as well, it's kind of. It doesn't really go anywhere fast. So if you had bought this one a couple days ago, then I would be selling into the strength sooner than later.
Yeah, I mean, I think I would be selling into this probably. I'm not sure what. Are there some other semis moving? LVLT is telecom, right?
That's telecom.
So is there other stuff moving?
Is 14, so
maybe someone's going to buy them. Okay, here's an intriguing question. Short Loco here. Who knows? It's trying to sit along the 10-day, and volume's drying up. So, I think maybe it's going to form a cup with handle, and then maybe it breaks up, but I don't see it as a short. It's not really failing yet. I see this, what you're talking about, this reversal here on heavy volume. Again, see how you can buy this thing off the 10-day or the 20-day, and it runs up and you sell into that. And did that on Monday, and you had to sell into that. And now it's holding along the 10-day. So, you can't say it's a short. Market's up, too, so it's not like you're going to have, be able to go hog wild on the short side and make tons of money. Let's see, what other questions we have here? P is for pounded, drawing up here. It is on the pullback. You had a pocket pivot here, and it's pulling back. Maybe it turns and comes out of here. And this is a stock. I played this move, and you get some nice upside jacks on this thing. On this day, I actually was short, and then it turned on me, so I turned around and went long, and then sold into the move, and that was smart because it came right back in. Maybe you could try it for a trade. Maybe you get up to the 200-day moving average. That's a possibility. I've been watching this one as it pulls back because I did play it the other day on that would be Tuesday right here, and I was short it to start out with, but then turned and went long. So I have no bias when it comes to stocks. If the stock says short me, I short it. If it says buy me, I buy it. And there's really not that much to think about. Just flow, kind of dance with the market, I guess, and flow with go with the flow. Illumina, I don't know. I don't trust this thing. I think you're in a sort of a late stage pattern. You get a cup with a handle, and the handle is itself a cup with handle. So you break in, you're trying to rally. I don't know, just bouncing around. I don't really see anything here. I'm not so sure I'd short it, though. I do like Amazon short. It's starting to come in. And probably Netflix on this rally. Maybe if it went a little higher, could probably load into it. GWPH, this thing's a disappointment to me. It's not going anywhere. To me, it's starting to weaken, and I don't trust it, so I wouldn't be messing with it. Certainly wouldn't be buying it. Amazon at 620. Let's take a look. Yeah, you're starting to see Taser. You had a sharp break this morning. I was actually surprised I was able to get 15,000 off short right off the open, because a lot of times if you try and come in, I'm hitting them on 5,000 share blocks, believe it or not, and they took them. Some turkey took them at like 10, 11, 12 cents, I guess, and then the thing just broke right after that. Now you're rolling back over. So, you get into this MACD stretch, and this becomes a cover point short term. Now it rallies up and it's rolling over. Could be a shot to really hit this one. So, when a company buys back their own stock, can they buy on upticks? Once I was told they can only buy on a downtick, so they are not forcing the stock on themselves. I have no idea. Do you know anything about that, Dr. Hay? Does anybody else know anything about that? And does it really matter? Okay, we're starting to see some stuff. You got Amazon on the 620. There you go. Someone just pointed that out. Watching Netflix here. Let's take a look at Netflix. Netflix broke but came back up. It's in a position to fail. What's the other one? LinkedIn is another one I'm keeping on here. It's also in a position to fail here. Market coming in a little bit. Let's take a look at the NASDAQ starting to falter a little bit. We'll see what happens. Like I said, I think this rally is probably shortable, and I could be wrong, and I know where my out points are if I take any short positions. So right now I've been laying out some stuff into the rallies and getting a little bit of success, but not a huge amount just yet. Somebody says, do you place more emphasis on action at or around particular moving averages or others, or just the action of the price bars? I'm not sure what you mean by emphasis. Like I'm weighing everything and deciding which I should emphasize more, and how does that figure into your trade? I don't really understand. I just kind of emphasize everything. I don't emphasize something more than others. I look for different clues and try to put it together and see what the stock's telling me overall. But I don't really build these little checklists of things that are going on with the stock and emphasize this or that. So I mostly emphasize which way I think the stock is going to go. anyways, any other questions? You got anything else to add, Dr. K? We're almost done here. I mean,
Yeah, no, I think stay the course really, and pick the proper spots. Whether in this market, there's not a whole lot of excitement on the long side. But if you played some of these pocket pivots and you've got some profits quickly in the last 3 days, do think about taking them, because the market, if the market were to come off 1%, and it easily could, then those profits are most likely going to vanish. Even if you've got you're sitting on a 7 or 8% profit in a couple days, the market tends to be very unforgiving.
Yeah. Just some other names. Palo Alto Networks is trying to hang in there. Found some support the other day. For those of you who follow me on Twitter, I actually talked about this intraday. It could be bought, and looking for a trade up to 100, which is not a bad trade, 6-7% from there, and it did get over 100 yesterday. Now it comes in. When that happens, I just sell into it, take my profit. What I see overall is just a lot of sloppy and choppy stuff. Look at like Grub here. Trying to get going the other day. Looked like you're en route to a pocket pivot off the 10-day moving average, but it's stalled out and closed slightly down. Now you're coming in. This probably at best needs more time to digest that 10 million share secondary offering. Twitter, nobody's asked about Twitter. I don't really like this move. I don't understand. It's acting well. All of a sudden, wham! They slam this thing. Now you're wedging higher into the 10-day. Maybe it comes in. I think it needs to settle down probably and set up again. So we made some money off of it here, off the 10-day, and that's a nice move if you bought around say 44, 45, and they run it up in here, and you get about 10-15% move there. That's nice. Nothing really to complain about there. AVGO, someone's asking about. Well, AVGO is just up there, so I don't know what we're supposed to tell you about that. Market's just choppy and sloppy. Still not a lot of movement rather. Let's see, what else? What other hot names are there? G-Pro. Like I said, this one I'd probably be selling it and nailing down my profit on this. SWKS. Here you have sells done. This now it's kind of doing what LVLT is trying to do apparently. So they're trying to move this up. So I think it's just money sloshes around. This thing's slowly trekking higher. This could have been viewed, I guess, as a pocket pivot here, and it's worked. So stock's going higher. Facebook hits the 50-day and bounces, and now you're back up into the 10-day. So this is pretty typical action, what you're seeing across the board in a lot of leaders. Nothing. It's sort of like an initial turbulence gets hit, hits the stock, and it bounces off of the 50-day. You saw this across the board. And if you were short on Monday, it's actually a pretty exciting day to be short. ISIS is just kind of hanging out. So it's trying to come around. I guess you got like a pocket pivot gap here. I don't know. If you like it, I guess you could buy it using the 10-day as a stop. But I can't tell you if it's going higher. Aruba. Not much there, just following the 10-day higher. Are you telling me you can't figure this one out? It's like, unless you're looking for us to tell you whether it's going higher or you should sell here, you got to decide for yourself. But if you bought it down in here, somewhere in here, and you're sitting on a 10 or 15 or 20% profit, figure it out. SWKS pattern recognition set as an ascending base, breaking out today on the daily chart. Oh, well, that should drive in a lot of people. I don't really know what they're talking about here. An ascending base has 3 pullbacks. Are they saying 1, 2, 3? This is anything. I don't really see it here at all. I mean, each of these is a flag, and the stock breaks out of the flags, and that's all I see. I don't really see. But you remember those? I wouldn't really trust any of that. It doesn't mean anything. So unless they're looking like this, 1 pullback, 2 pullbacks, 3 pullbacks. But this pullback came below this pullback, which isn't typically what you're going to see on an ascending base. So I don't really know what they're talking about, and I wouldn't rely on that. If you bought it and you're holding up on the stock, okay, then I guess you can just sit with it. So and figure out what's going to cause you to sell it if it doesn't go the right way. Let's see. Rax has a short to the 30 level. I don't know. You're gapping down. This thing's so washed out. I don't know. Yeah, I think you're kind of late. So and you're more reacting to stuff. So yeah, you think it maybe it undercuts here? I don't know. I really couldn't tell you. Not really anything I'm looking to short here. Let's see. Not much going on. It just market's up. Triple witching tomorrow. Things chopping and slopping around. That's what it looks like to me. And you know, I don't really need to make any big commitments here, I guess. Just hanging out and watching things. My problem is that I'm up pretty good for the year, so what I really need to do more than anything is play a strong defense, I think, right here, waiting for something to pop up in terms of either a nice break that's shortable on the downside where I can make a bunch of money, or something on the upside. And right now I don't really see anything setting up on the long side, whereas I see a lot of things that might be setting up on the short side. So I'm kind of watching how these things play out. But this could be a shortable rally today, and that's kind of how I'm looking at it. Now, I could be wrong. If it just continues higher, that's fine too. Just don't do anything. But know where your out points are and look to be taking profits, I think, into sharp upside moves. Las Vegas Sands short here. Well, you know, you're asking us short on resistance at the 20-day. If you want to do it, it has held below the 20-day on the bounces. But really, the place to get short this stock was up here, and now you've seen it come down and all these big ugly volume gap downs and blah 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 and coming down. And short term it might be washed out. So if you short it there, if you think it's shortable and you want to short it, then go ahead and short it, but know where your stop is. But I don't think it's anything I'd be going after here. It had to be shorted up here, and believe it or not, I was shorting it up here, but I didn't stay with it because I saw other stuff moving at the beginning of August, and I should have stayed with it. So. Anyways, let's see. What else? Anything else? I think that's about it. I think we're done. So, you know, I think the market's just kind of in a funk here, bouncing around. Indexes show strength, go to new highs, but it's all about what stocks you're going to be in. Anything else to add to kind of wrap up, Dr. K?
I think we're good. You know, I mean, just be patient. That's very important, because when there's no opportunity, you don't force it, and just you know, be content to sit back. You don't have to trade every day.
Yeah, that's why God invented golf. Anyways, or music or whatever. Anyways, you're welcome. For those of you saying thank you, don't jinx me on the triple digits. So still got a little ways to go to get there, but you know, a good run could do it. Knock wood. Anyways, we'll see what happens. Keep hanging out. We'll talk to you guys later. Thanks for showing up as always. Catch you next time.
So long, everyone.